Good morning, everybody. I hope you are all doing good. For today, I want to take a look at the 1050 to 1110 ICT macro. We're looking at Monday's price action on a higher time frame. We are bullish on a daily. We look at the daily chart. Put it into this daily fair value gap. We're looking for these daily relative equal highs. Moving down into a lower time frame, sitting down Monday morning, 8 o'clock. We had this high, lower high. So if you look here, you have order block, trades into that order block, fair value gap, trades back up into that same order block, failure to trade back up inside that order block, failure to go trade above this high. Sell side was taken out with these lows, and these highs were all jagged in my opinion. Last week's high resting above here. What draw my attention were these equal lows, these relative equal lows, these relative equal lows down here, those drew my attention. If we quickly take a look at US 500 and we look at this same piece of price action, look at the same highs in place, we can see we have relative equal highs here, and ES took out these relative equal highs where NQ failed to do so. So we went up here while NQ was unwilling to trade above those highs, meaning that it was very bearish. And we only traded up here on ES to take the stops and tank it down. We also had these relative equal lows, which we did take before market open, 8 o'clock. We did trade down into those. And then we also had a low right there, this wick. And we did have some equal lows resting below us. So SMT with NQ, if you take a look at the Dow, just ended up rallying right through everything in Dow. So this was trading against the rest of the indices at the time of that setup. It was Monday. We did not have a lot of news events. We only had a Empire State Manufacturing Index at 8:30, and that was that. We did not expect anything else for that particular morning. So this was unwilling to take its highs here and then ended up rallying higher. We did have equal lows here, and we also had a couple of equal lows down here, which I noted. We never traded those. As you can see here, 8 o'clock, we traded back into this order block, rallies higher. So this was not in alignment with us. And dollar index, we had equal highs in place. And I was looking for this 4-hour old low to get traded. We also had this low in place here. We traded below that. And dollar index rallied at 8:30, taking its highs. So taking that back to US 30, we ended up not doing much at 8:30. 9:30, we traded down lower. Now, couple all of this with the fact that even though we are still bullish on a higher time frame, we did expect a daily time frame to give us a possible retracement back into that fair value gap. So that permits a sell scenario where you would expect price to tank down. So I was looking for price to tank down, show its hand to me, give me the Judas swing. We tag the lows, we tag these lows into this, below this low here, inside of this fair value gap. This was a 4-hour fair value gap. Right there. That was the low of the day. If you look at a 15, see how the candle bodies all stayed above consequent encroachment. That was something that I noted when I was looking at price trading on Monday. Look at the hourly chart. See that? Candle bodies closed above consequent encroachment. I was looking at this 1-hour fair value gap as a target to the upside, which I had on the charts. This 1-hour fair value gap. That's the level. I had it on the chart. I pulled it through. Why? This is a market maker buy model. We're expecting price to trade up into these highs. So that is something I would like to see price trade into, and then I want to see how price reacts on a lower time frame while we are trading inside this level. So that to me was salient. I was looking at it, and I just pulled it through from last week. On a daily, fair value gap, this would be a inversion. I marked out the inversion, the fair value gap high, which now it's inversion, but the fair value gap high did not note the low, and I had consequent encroachment of this fair value gap on my charts. If we wanted to trade down into that, that was something I was looking at. I also had consequent encroachment, if you look here, of this fair value gap on the charts. So those are all the levels. Another 1-hour gap. You move up real close. This gap right there. I just noted that as we were trading down lower. So down into a 1 minute. Let's go back to Monday. So we opened up a real messy market. Just traded down, 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 down. Tanked. 9:30 opening. Tank. Hit all those downside targets. Trades into the 4-hour fair value gap. Daily consequent encroachment. And I took note of 15-minute old low when we traded down lower later in the day. Took note of that low. We traded into that. And I was looking at how price was unwilling to close below this 4-hour fair value gap consequent encroachment. We stayed above it. So that was smart money tipping its hand to me that we were not going to go any lower. By the way, this 1-hour fair value gap, we tapped it. Initially, I was looking for a breaker block in here, which unfortunately that did not form on the 1 minute. I was looking at a 30-second, 15-second. I would have gotten my breaker block on those time frames, and I was looking to go long, looking for something above this high. Unfortunately, my model was not offered, and that's just part of trading. Sometimes you're not gonna get an entry to get on par with that position. We traded up into this 1-hour fair value gap. This 1-hour gap. We fell off sideways. 950, 1010. Inversion. Pull that through. Trades back up into it. What have you got sitting right there? Rallies. Comes back up into 1020. We target low, low, fair value gap, 15-minute old low. Runs right to it. So if you're in a setup, some of you might target, and ICT talked about this in the 2022 mentorship. Fib, pull it on the range, low to high. If I'm getting in here, I'm looking for shorts. Where can I look to take a profit? Discount of the range below 50%. Fair value gap right there, sitting at 50%. Order block sitting below 50%. You can take that, pull that through. We traded into that. We had our slight retrace. Then we tanked. So that's a potential take profit. Relative equal lows. That's a potential target. Fair value gap here. That's a potential target. We hit that. And the old low would be terminus. We traded into that there and we bled through it a little bit. You could also use this 4-hour fair value gap high. That could be a potential target. Put quadrants on this fair value gap. 75% consequent encroachment. 25% the low. All of those are relevant targets. You could also have looked at this fair value gap. That would be a reclaimed inversion. Reclaimed inversion Y. We traded above it, back into it there. It's an inversion. Traded back below it. So it would be a reclaimed level. So inversion, you can take the high, consequent encroachment, or the low. High was traded there. Consequent encroachment lines up with 75% of this range, 25% of the range, doesn't matter. Lines up with this, just about lines up with it. Traded it there. The low was traded there. So there's that. Another thing that you could do, see if my FIP's going to work with me today. I could look at this swing. What swing is this? This is the swing that took out the buy stops resting above here. It's the manipulation. It stops traders out. So you take that swing and you pull extensions, deviations of this price move. So one deviation lower. Let me just pull this out so we can see that. One deviation lower would be this level. Two deviations lower would line up with order block, inversion high. So that's another good level to take something off. See if I turn this around. I don't think I have any more levels on. Okay, maybe I do, maybe I don't. I don't think I have though. So one deviation, two, three deviations. Look at how three deviations lines up with this low, this fair value gap, and the high of the 4-hour fair value gap. How random. And then 2.5 deviations line up exactly with this low. Also inversion, consequent encroachment. Just thought that I would throw this stuff in there all for free as an extra. And we're not even at the actual stuff yet. So that was what I was looking at here. We traded lower. Look at how price sits at the lows. Comes right back up. Unwilling to take out this low. Right back up. What time is this? 11 a.m. What happens at 10:50 to 11:10? Lunch macro. What happens in lunch macro? Price reverses. So we expect what's been going on here. We traded down. This is why I covered this stuff. Traded down. What is this? Judy swing down, taking out the sell stops. What do we do then? Rally up higher. Why? We induce longs. What's interesting above here? Sell stops. We take those out. Everybody that was short got taken out. Everybody that wanted to be in a long got taken out there. Everybody that was short got taken out there. Put it into this gap. Higher. higher, 3 times higher. Fail to take out the high, fail to tap into the gap. What does that tell me? We are bearish, very weak. What do? Bam. Market structure shift. So what's happening in this move lower? Everybody that bought this rally higher, it stopped. What happened when they traded through this low? Everybody thought it was going to keep on dropping. So what did they do? They induced shorts. So that's the story behind the price. They induced shorts. Where do all the short sellers put their stops? Right above these highs. It sets the stage perfectly for 1050 to 1110 macro. It sets it beautifully. Pull this back. So looking at this macro at this time of price here, yes, it's messy. What did we do here? Traded below this low. So we took out sell stops, taken out. So we then start trading higher, higher, higher. I'm waiting for it. I'm leaving it to show its hand to me. What happened right here? What happened? What's this candle right there? Breaker block. Pull this back. Breaker block. What's price doing right there at the high? It's tapping into the high, tapping into the high, moving away, tapping into it one last time, accumulating longs. Where's it gonna go? Above this high, inside this fair value gap. What did it do? Traded above the high into the fair value gap. Entry could be anywhere in there. Stop could be below the breaker block, fair value gap, order block, mean threshold of that. Stop. Take profit would be at the high. It's a 1-to-1. Profits were banked. If you wanted to see more and you were willing to hold it, it gave you more. Scenario number one. One way to look at that. The other way to look at this, what do we have sitting right there? Inversion. What would we be targeting? The high and the fair value gap. What do we have below us? We still have the breaker block as a base. Remember, I like to talk about it and I say we have a base below us. So this 4-hour fair value gap is the base. That's the base. And it pushes price higher. Gives you a foundation that tells you we're gonna reverse. We're gonna push it higher. breaker block. Just mark this with a line. Breaker block. Along anywhere in this price area, doesn't matter where. Stop below the breaker block. Fair gap, breaker block. Order block, mean threshold. That's a good enough. Stop. Take profit. Anywhere inside this fair value gap above this high. Could be a simple 1-to-1. Could be a little bit more. Profits made. So that's setup number 2. So that's how you would use a breaker block, the inversion, to get a setup in here. Now I can guarantee you, you're not going to be expecting this one. Order block. Down close candles. Trades back into this. Long anywhere in here. You still have the breaker block as a base. You still have this inversion as a base. Still have a fair value gap right there. Consequent encroachment of that level is still good enough. Anywhere in there. Profits were made. So there's a couple of PD arrays how to get into this particular price run, and you can bank something off of that run. If you were really ballsy and you look at that low right there, you see we have this low in place, which took the 15-minute low. I'm willing to go look at the bodies below the low of the 4-hour fair value gap. We rallied higher, retraced, rallied higher. Look at candle bodies. These candle bodies go slightly above this candle's body. See that? It wants to push higher. That's what it's telling you. It's going to push higher. What did it leave right there? Equal highs. Pushes lower. Trades into wick. Rejection block. Trades into the rejection block. Rejection block. Wick. Consequent encroachment of that. Soon as it taps it, consequent encroachment. Anywhere below this low, if you take an entry down there, that is a turtle soup. Turtle soup. And you have to give the stop. Have to put that stop by 2 handles. Gotta give it at least 2 handles would be good margin. Let's see here. Let me check this out. If it wants to work with me here. So 4 ticks, 8 ticks. 8 ticks is about 2 handles. So 2 handles below that low. Anywhere below these lows, you could still be targeting this high. You could be looking at this area there to make some profits. Turtle soup. It's not going to be for the beginner. This takes a lot of practice, many years of practice, testing, forward testing to do turtle soups. To be able to take it as it's right down there, it looks like it's going to trade down lower. You know the logic why it should not do so. And you take this entry and you're looking for these highs. That's another way how you could approach this. You also have what there? Order block. What does it do right there? Trades above this candle, so it validates that candle, closes above it. What happens here? Opens, it trades back down into the order block. Anywhere in there, maybe even there, stop at the low. Why at the low? Order block. Fair value gap. Rejection block. 3 PD arrays. So at the low, targeting equal highs, fair value gap, profits were made. So I've given you multiple ways, multiple PD arrays, how to get into this. Order blocks, breaker blocks, inversions, turtle soup, rejection block. So I've covered a whole bunch of PD arrays in this $10.50 macro reversal. Now, how you would utilize this is if we are in a day where we open up, we rally higher. You look at the 1050, you're expecting a retrace. Retrace to where? Lunch macro does one thing. It retraces, hunts the liquidity below an old high or low that's in place, or retrade back into fair value and continue rallying. So if we're trading down, like we did here, highs were in place, price traded back up, took out the liquidity above these highs. In this case, we did not continue rallying down lower, even though there were opportunities in here to go back short one more time. Opportunities in here to take a potential short lower. Generally, you're going to find where it's going to retrace when it's trading down, 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 or higher, 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 higher. Retraces, hunts the stops, or it trades back into fair value. Trades into fair value. You could do what? You could short right there. Trades into that fair value gap. That's a potential short to get involved. Short it down back into 4-hour fair value gap. Fair value gap, consequent encroachment. You can take that entry short. So you can use this as a retracement model, or you could utilize this as a model and trade the reversal. It's going to depend on your personality. If you're somebody that trades continuation, then you're going to utilize this to trade continuation. If you're somebody that likes to trade the reversal, then you're going to go in and you will be utilizing this to find something in here and trade up into this high or into this fair value gap. That's going to depend on your personality and your backtesting. But generally, it will act as a macro that hunts the stops depending on what has happened in the market. If we rallied, it's going to hunt for some stops, retrace, and that could also be utilized. You look for that retracement and you could be looking for continuation down lower if the market tips its hand to you that it wants to continue trading in that downtrend. And that is how you're going to get involved with that. Hopefully you have found this one insightful. Until the next one, good luck and be safe.